It seemed recently that a full recovery is now on the horizon. We've got vaccines rolling out, lockdown restrictions around the world mainly being lifted other than the occasional circuit breaker here or there. So as you'd expect, markets have been rebounding. But do the actions of US stock investors reflect reality, or are they maybe becoming a bit overconfident? Let's take a look. Hey guys, it's Nicholas and welcome back to Market Movers, where we cover the main market moving news. So as you'd expect, there's been an increase in demand for risk assets with the recent positive signs about the potential end of the pandemic. But actually, the rise in US stocks started way before any encouraging news about vaccines. Perhaps the best place to see this is with IPOs. There's been a record $149 billion raised in the US in IPOs this year. And there are now concerns that the market is becoming frothy, which basically means that investors are ignoring fundamentals and are just buying up the assets anyway. And if we take a look at the recent IPOs from Airbnb and DoorDash, that definitely seems to be the case. In fact, Airbnb more than doubled on its first day of trading, and only 3 companies raising more than $1 billion have ever risen more on their first day. The top one, as you can see here, was Palm Inc., which created the Palm Pilot. You remember those? Perhaps some of you are too young to remember, and that says a lot about it because that company doesn't exist anymore. But if you recognize the name, it might throw you back to the early 2000s. And that's kind of the concern at the moment. The euphoric demand for IPOs right now is reminiscent of the dot-com bubble. In fact, it's been reported that money managers who invest in IPOs have had to actually start factoring in the euphoria of retail investors into their models, since they outline their normal models in anticipation of the IPO. But as soon as the IPO takes place, this euphoric demand surges, which makes their model redundant. So they're having to factor in the retail investors up front now. Now, this may be a sign that there's too much confidence from investors. I mean, after all, although a recovery is expected, it's not likely to be a quick, sudden one, and there's going to still be struggles and many uncertainties for a while yet. So it's just like what the chief technical equity strategist for the Bank of America Securities said: the only thing we have to fear is the lack of fear itself. Now, surveys from Absolute Strategy Research showed that global investors are more bullish about next year than any other time since their surveys began. And they've warned that the markets could be heading towards groupthink, as there's this big difference between their negative macro outlook and investors' really positive expectations. So what this means is that there could be high levels of volatility in the future if the consensus view gets challenged by actual events. But at least for now, it seems like that might not be a problem, as there's been such a big surge in liquidity. But later next year, there may be issues. It's argued that at the moment, investors are borrowing returns from the future, and there's an expectation that earnings will be improving next year. But there could also be a problem that improved earnings will lead to even more demand, so that could cause even more rises. Unfortunately though, it's quite likely that the economic recovery won't match the expectations of the stock market, at least what the stock market is showing right now. As an article in the FT put it quite nicely, as welcomed as this recovery will be, it's unlikely to be sufficient to fully offset the impact of corporate bankruptcies or the detrimental effects of higher inequality. Investors might rue the day they ventured into asset classes far from their natural habitat that lack sufficient liquidity in a correction. But what do you think about all of this? Do you think the US stock market is in danger of a steep correction next year? Or do you think that stocks are valued fairly or perhaps undervalued? Let me know in the comment section down below, and please do like the video if you found it interesting or helpful, and share it with anyone else who you think might find it interesting. Thanks as always for watching. I'll see you in the next one.